Go.
Welcome. This is the November 26th episode of the Trading Pit. Man, we got a show today. Bitcoin fails to conquer 100K while the Coinbase premium evaporates. Is 80K next? We got Dino tokens like XRP, XLM, and Cardano having a run. Is that the best trade? And how much sell pressure needs to get absorbed to really take us to that six-figure Bitcoin? I'm your host, Marconi White. Today, I'm joined by Benjamin, the whale hunter, and Amit, the range sniper, both looking still as they hunt their prey. But best yet, don't worry, that's not all we have. We got Ben Lilly, who'll be joining us later in the program to break down the state of the networks for Ethereum, Bitcoin, and Solana, and what that might mean for their performance in the coming months. You're not going to want to miss this. A lot of the work that he's been doing for, I don't know, it feels like years is coming into this. But first, before we break down Bitcoin, where it's at, we're going to do some rapid fire where I'm looking for hot takes on some complex questions. Benjamin, Amit, you guys ready?
Yes.
Let's go.
Oh, bringing the energy from a fresh sell-off. All right. So, Benjamin, let me ask you, how important is six-figure Bitcoin to kick off a rally in the rest of the market?
It's important, quite important, actually.
Okay, quite important. We got that. Amit, do you agree? Is it quite important or is it super, very, very important?
It is one of the fundamental landmark that we can achieve with Bitcoin, because once it's a dream for a very long time that will be realized, and then you will see a rally. Basically, that's saying we have conquered 100K. Let's go.
Conquered 100K. Let's go. Well, hopefully when we get into a little bit of the Bitcoin analysis, we can get a better sense of when that might happen. I think the confidence it will happen this year, but with this fresh sell-off, I think the timelines are pretty bearish. So, Amit, I want to ask you, how much sell pressure are we seeing at 100K?
I haven't seen that kind of pressure before.
Break that down. This sounds legendary.
Yeah, this basically started from 95K onwards. So generally, before this, right, when we were in 86, 87 realm, we were talking about, we see the walls every 1% and they were getting knocked out. And that point I was saying, if we look at the walls, that is 2 or 3%, basically outside the 2% range, or be sitting somewhere near 5%, that looked like a wall that is staying and that is telling the price is not going to go any way further. That started to break down from 95K onwards. And every $500, we saw walls after walls after walls. It got knocked down, came back again, knocked down, came back again. So, and it's not across one exchange, it was across all the exchanges. So at that point, I think I was fascinated looking at JAI. I mean, from last week onwards, it decided not to take any trade, or basically start deleveraging all the trades. And we were discussing, saying, fascinating, what's going on here? Why when the market is pumping, JI is deciding not to take big trades. And then it looked like basically we are breaking down. And that's exactly what happened. So yeah, it was fascinating to see.
Little clairvoyant little J.I. Butler. Benjamin, what's your take on this legendary sell pressure sitting around the 100K?
Yeah, so there was around 350 million worth of static walls sitting near the 100K zone, like 99K to 103K zone. And we started getting a lot of alerts. But the thing is, as price started retracing, in 2022, when FTX happened, and we basically fell down to 20K zone, if we have listeners from Oculus, they would know that we had publicly announced that we are buying a lot of Bitcoin at the 20K zone. And there were a few who basically pinged us and said, hey, you should be stupid to be buying here. It's going to 5K, 3K, 1K, and so on. Because FTX is dead, everything is dead. But the expectation for a lot of us who've been here nearly like 9 years in the industry is that someday to see 100K come in. So, buying a 20K for a 5X any day has been like a dream, to hold and run it. Similarly, a lot of OGs for a long time have had 100K as a goal, right? So this is probably a lot of old whales also exiting at 100K because, it's a very nice spot to exit, take some profit, Like you've held from, when Trump joined presidency the first time, it was at $995. A lot of us bought at that time. I remember buying in ATMs in Europe, So for us who bought at those periods, right? This is amazing. This is 100x that we've basically stayed for nearly 7 years, 8 years. So it's for the sake of that happiness. I'm pretty sure a lot of whales were basically, taking some level of profit because it's been a long wait. And that type of sell pressure basically is, I think that is basically the primary sell pressure, because you have compensating buying pressure from ETFs, Sailor, the Golden Boy, and so on.
Yeah.
So yeah, it's a round number. You always see some shenanigans at that spot.
Well, that actually gets into the next question. So what we're hearing is we got legendary sell pressure coming in, perhaps from a lot of accounts that have been held on for 4 years, certainly perhaps longer, maybe 8 years, maybe 10 years, that are finally starting to offload some of this. I think I saw something. There was a Kyle Dupes on X. I'll see if I can add this into the description later on. But he was noting that any of the buy pressure coming in from the ETFs or from Michael Saylor's being offset by a lot of the OGs. So I think it was confirming what you were saying. When you will, I guess the next question that all of us want to know is, what about the whales? We have these whales that have in the past have sort of stepped in that really see a long-term vision from being able to either buy and hold, maybe do some other types of trading, maybe do some arb trading. Are you seeing any of that? Or are we expecting the whales to come in, add some floor pressure so that this doesn't just drop off a cliff?
I don't think we will see the similar activity from those kind of whales come back again, because the market, when it comes to BTC, has heavily shifted. It's very different type of participants that you have now. That's why you see the entire crypto market basically split. Like you have a big majority of participants who are not looking at Bitcoin chart. Like they're not touching Bitcoin, right? So it's a very different market that we have. And I don't think we will necessarily see those old whale type of activity come back. It would probably be a lot of, like institutional retail, that we could call it as. Probably a lot of ETF buying, which is partially retail and partially institutional, come in and, capture some of that flows, compensate for some of that flows happen.
Okay, so we can't really expect the old whales to come back, and it's possible some of them are even going into paper Bitcoin. Is it not?
That is highly probable, because a lot of these guys who basically, I mean, if we held from $995 and you have right now millions in Bitcoin, basically you can very easily move into an institutional structure. You can set up your entities and position it over there as a miner or as an old buyer. And you can go into wealth management. You can go into ETF structures. There's a lot of opportunities right now to secure it and custody it. So it's highly possible a lot of old whales. And this is basically a suspicion I had in the past 8 months as well, when we were seeing lackluster activity from some of those wallets. And there were a lot of old whales who were basically moving funds, right? And apart from the SegWit reasoning, there was no other big reasoning for them to move it into custody and so on. So the thesis that probably these guys are all realizing that they can figure out better yields, they can figure out better lending routes for their Bitcoin that they've held for 10x to 100x instead of selling it. Yeah, that's probably what is happening.
Okay. All right. Well, that gives us a nice snapshot of how we got to going from 99,000 all the way down to, whereas I'm looking at the chart right now, 92,900. Let's transition, talk a little bit about the actual charts. I want to get in and look at Bitcoin. We had a question here from Max Meyer saying, good morning. Good morning. What levels would you look to re-enter Bitcoin? Amit, why don't we start with you there to talk a little bit about what that chart is looking like? And for all those out there listening, welcome. Glad to have you here. We have the live stream going on X. We have the live stream going on YouTube. We've listened to everyone's feedback. We're trying to accommodate. So wherever you are, hit us up, hit the like button, hit the subscribe button. Share this with all your friends and family. Let them know that we're here to help them walk through the rest of this bull market, because I've got a job here, and I'm hoping this isn't over. But Amit, walk us through what you're seeing from a Bitcoin perspective. Where does it go next? And to Max's question, where's a good re-entry point?
Right. So if you can see my chart, right, red line is basically that's what we drew yesterday before the sell-off came in, and this is the basically, you can say, I call it a last straw before it gets into 80s. So the bounce that you're seeing, I see it as a technical bounce because RSI just reset to 50 on 12-hour time frame. So whatever bounce is coming, it's a technical bounce. It's not driven by sentiments. There is no news around it. So this can easily sell off. So for me, right, I'm waiting here. So this is there is, I mean, from the last before we had this run up, I had this 3-day range that I was tracking, and I started trading this 3-day range when it broke off. So based on that, right, even if I put just a simple fib on top of it, so 87 to 84 is a very good area, and that would be basically 50 to 60% your sell-off from the top, which is a good reset point, and it will create a higher high or higher low rather, sorry, before it runs up again. So for me, I would wait and see on a 12-hour time frame whether it is going to bounce up here or not. And the ideal scenario would be if it goes above 95, I'll start entering. Otherwise, I won't. So in ideal case scenario, right, this is what I'm thinking. It's going to bounce to this level, drop off, and then go up again. So this is what I'm thinking, and this is where I would be buying.
All right, so going down to that 84 to 87 range, looking for a rebound there.
Yep.
And I guess really they're looking for some actual volume to come in. As you said, right now we're seeing sort of a technical bounce in the 92 zone, which is more, which doesn't really look sustainable.
Yeah, it doesn't look sustainable because the same technical bounce, right? If you go on the lower time frames, if you look at 1 hour, RSI has completely reset to basically below 30. And then we know historically the bots come in at that point of time. That gives you a small bounce, and then it continues the way down. So that's what it is looking like on every other time frame. So on 1 hour time frame, it has hit 30. On 4-hour time frames, it's yet to reset. But on a higher time frame, on 12 hours, it has hit 50. So historically, you get a small bounce like here, and then it drops off the cliff. So I won't trade this. I will wait till 95K is, or basically at least 95K is over, and that is conquered, and then I can get in, or I will wait for 87K. I can basically, if you want to keep the leg in, right, the way I would play this is basically ladder from here all the way down to 83K with my risk sitting between, if you use an expo on 1.07 to 1.09, this is where all your risk will sit between 87 to 84K. So let's say if there is a wick coming down here, right? So your risk will be sitting at 86, and you can if 84 breaks, you can cut the trade. Otherwise, you can ride all the way back to 100K, because I don't think 100K will break in one go. It will take, because there is a lot of, as Benjamin was saying, there are a lot of OGs sitting that will sell at 100K again. And the pressure hasn't gone away. The pressure is still there.
Yeah. So Benjamin, I want to bring you back here. You talked about the trade setup here to really look for a better entry sitting in the 84 to 87 range. We just talked about the sort of legendary sell pressure and also kind of the psychological side of it. Do you have any perspective? I mean, Jay's basically taking the chips off the table, saying this is not a good risk reward kind of trade right now. We see all that legendary type of sell pressure. What's your confidence that can get taken out? And what are you actually looking for to suggest that it's going to get taken out in the next 6 weeks?
I think this is also a lot to do with the Thanksgiving week. Typically we have such type of lackluster behavior right on the Thanksgiving week. To be honest, like I don't remember periods when we just flew past the resistance during a Thanksgiving week. And additionally, we saw some corrections all across the market the past days. Everything is a little bit, sidelining. So, and we had some massive runs. So I think it's a good cool off. If we do not clear 97K by this weekly close, I think we will retest 87K. So that's my thesis. Because if it is not able to break 97K faster, then it is probably going to do like a complex correction and retest like sub 90K, 87K. But I think that's as far as it goes. I don't think we get some 25% drops
I was
here
about to
that
bring that
soon.
in. Remember, Marconi, we talked about 25% correction in November.
Yeah.
Yeah.
See where does it go?
Yeah. What is that? Well, right now that would take us just from 100K down. Wouldn't that take us about 75K?
Exactly.
I think that probably comes after 110K or so.
The thing is, you will still sit at all-time high, on top of all-time high, even if after 25% correction. That's the point.
Yeah. Right. So
Because on the open interest side, I don't see so much of leverage built up. I see a lot of, I think it's cooled off quite much.
well, is there any data you could share with that? I know we have some technical issues bringing up the charts, but I'd be interested to hear that perspective on sort of the leverage. I think I saw something from Mike Novogratz. He was on MSNBC talking about the fact that there was so much leverage built into the system right now that was really preventing us going all the way past 100K. He suggested it more of an 80K. Not to say that Mike is somehow the technical genius. I think he's made a lot of calls that maybe directionally are okay, but what information are we seeing right now on the leverage side?
I wish he had watched the leverage on Luna, so we wouldn't all be hurting right now. So he should probably take everything and shove it in his pants and sit in the corner. But when it comes to open interest on Bitcoin side, I think Binance basically is the king, and then is basically CME. Yes, CME has had quite some positioning, but I think a lot of that is cash and carry trades, given that we've been seeing some premium over the basis points and so on. And I wouldn't worry too much when it comes to Bitcoin's open interest further. I think it will continue to rise. It will probably make new highs, but a lot of that is going to be a lot of cash and carry behavior that comes in. So when that's the thing, right? So Bitcoin, I don't think you have a lot of retail doing over leverage game. I don't think that is the situation anymore, because retail is very busy longing, mooding on 25x leverage or 30x leverage. Okay. So
Right.
the
So they're all in the
leverage
meme coin
traders
game.
is a little different in the cycle comparatively. So probably the good measure will be if we were able to separate liquidation volumes by sectors and see when the big flush happens on these sectors, then you probably have a better signal that okay, leverage has actually gotten washed out. Because I think so for the past months as well, we kept an eye on the open interest, and during the period when Bitcoin was sideways, then we did saw corrections in open interest, and it pulls back up. But then we also saw that basically open interest behavior flatlined. So it remained between 80K native units to 90K native units. It's just been consistently going up and down in that range. So it's never broken out to like, we went from 65K to 100K almost, 99K, but open interest did not go up like 50%, right? So it is a little bit of a different market. So I don't think we can use that as a measure. I don't think there's too much over leverage. Sure, there was FOMO near the 97, 98K area. Like, for sure, there were a lot of people who were like, okay, maybe let me sell some. And then there were some people, I sold at 80K, maybe I buy back some here because I want to ride it to 100K. So that type of behavior was there, but that is being washed out. So I don't think we are in an over leverage situation.
So just to summarize here, what you're saying is retail, at least from a Bitcoin perspective, isn't showing signs of excessive leverage. You think a lot of the leverage that you're seeing on the CME and from an institutional side is really more cash and carry. So it's not trying to really go long directional bets that are perhaps over leveraged. So you're not seeing the signs of froth that maybe Mike Novogratz is talking about.
If he is going based on CME to say that we're having a lot of froth, by numbers, yes, okay, open interest has gone up a lot. CME open interest is at all-time highs. Great, yes, we can get a correction, but to think that it is going to cause some massive drop like 40% or 30% or whatever it is. I don't see that yet.
Okay.
So I see a lot of that positioning as still delta neutral.
Yeah.
So I'm not so worried about that part.
Okay. Fair enough. All right. And I think for everyone listening here, you kind of have the setup that these guys are looking at. It's kind of the 84 to 87 range, which could be a good spot to re-enter from a Bitcoin perspective. I think we had two comments here. One from Hello World talking about trading more stocks to kind of grow using some of the Bitcoin proxies. Hello World, good to see you. It's been a while. I know we're not really going to be talking about those today. I do have a video coming out talking a little bit about that, more on the buy and hold than the trade side, but definitely do a comparison of some of those stocks. And then Max, you're asking about Ethereum. I think that's actually where we're going to be heading next. And definitely you're going to want to stick around to the end because Vin's going to go over a state of the network, and he's got a lot of information to share on what Ethereum, Bitcoin, maybe Solana are doing from a state of the network perspective, can really give you a deeper insight, not just on these shorter term moves, but maybe something a little bit more drastic going into the rest of the bull cycle. Last thing I want to point out before we bring up Ethereum, if all these questions, if you got questions about this, you're wondering how to trade, or you like to prefer to have your Jay Butler making some trades, taking some risk off the table, definitely reach out to these guys, reach out to me, see what we can do to put you in charge, in touch with that and get that set up. Definitely a nice way to manage some of these crazy drawdowns. Interesting to say that Jay was kind of taking the chips off the table. Is this, and I'll ask this and then let's get into Ethereum. So Benjamin, when you look at what Jay's behavior was over the last week, really starting to take those chips off the table, any perspective there? Have you seen this behavior where it's surprised you before, where it's been right, over the long term, but it was really taking some chips off the table when you thought maybe everyone else was ready to go in?
Well, honestly, this month has been some tremendously nice behavior. Like over the year, we've been making a lot of improvements, a lot of changes, and it was very nice to see a lot of that basically come into action. And we had multiple users basically ping us and show their happiness that it's been doing a good job. So we see that on the risk management side, especially in this trending situation, it's doing pretty well. It's been managing tight risks, and we went into a very extreme situation last week, right, with 99K. So I was partially surprised, like, okay, good, it's exiting some positions, but was not entirely to say that, okay, that was shocking. No, it wasn't shocking for me, because we had a lot of alerts. So I think it was very fair from a lot of the metrics that it started exiting positions and so on. So I think it was quite normal.
You mentioned over last year made a lot of improvements to the model. Can you just describe one of those improvements, just out of curiosity for the audience, maybe isn't as familiar, maybe something that you invested in from a risk management perspective, a price efficiency perspective, whatever that would be?
Well, a lot of order book based behavior we had to work on. We had a lot of things going wrong, primarily because, on the order book side, we probably interpret things wrongly and see that as a exiting behavior than a continuation behavior. This also has got to do with a lot of OTC deals that basically happen as a result of the ETF flows, right? Like ETFs get settled, or the BTCs get purchased through two routes. One is buying from Coinbase, second is via OTC deals. So like a lot of things did not become reflective in the order book for the past 1 year. So the way we were interpreting things, we had to evolve on and keep changing a lot of those things. And we embedded a lot of new algorithms, improved on the risk engines, on how sizing basically happens. So ranges basically gets defined based on the metrics. And on the whale wallet side, we've seen quite muted behavior. Like we don't even see our Pablo back. It's been a while. There's no significant Pablo action. So on the on-chain wallet behavior side, when it comes to BTC, it's been lackluster when it comes to information. So the weightage had to also, be shifted along, because on-chain had a lot of weightage in our models. So we had to take this into consideration on reducing the weightage numbers and so on. And that was still a little bit harder during the sideways period that we had over the past months, because it was either constant up or constant down, and things didn't work, and you got a great entry and then it exited too sooner because the interpretation of order books was wrong. A lot of those things basically was happening, but we had to keep going. We had to keep improving, keep changing things, and it worked out.
Well, I know that you've been really telling everyone you want to go on a vacation so badly. So you're just waiting for all these improvements to come in, so you can just let Jay do all the work while you're somewhere on a beach in Dubai drinking a virgin pina colada. maybe. All right. So there you have a good idea for what Jay's doing, all the work that's been going into it. I'm impressed by it. I like it. But let's get into more of the price action. So let's get into Ethereum. That's the next question. That's the next trade. There's been a lot of interesting activity. As I mentioned, Ben's going to be sharing some of that coming up very shortly after we get through some of this trade information. But when you look at what we're seeing from an ETH perspective, there's a little shift in the narrative. You've got the market split on the timeline. Some people saying this is the deadest of dead, and this is the worst trade you're going to see. Others people saying this is starting to show signs of life. Ahmed, I want to come back to you. What are you seeing on the ETH chart? Are you looking at some entries here? Are you sitting on your hands? What's the safe trade this week?
So ETH chart, right? ETH is basically, yesterday when it was running at 3550, we were thinking this is going to go to all the way to 3800, but that looked like basically that was a liquidity grab. And 3400 is the line in the sand at the moment. There is a trade after 3400. Below that, I mean, consider this, right? If BTC tests the range that we are looking at for 87, that's 8% below from the current price. That brings ETH very nicely to 3K. And that would be a perfect trade to get in from 3K to 4K. It's again going by the ranges. If go on a higher time frame, looking at 3-day chart, from there where the MSB happened, from the market structure break all the way to the high, 50% brings back all the way to 3067 or 3071. So again, between 3150 to 3000, that's a perfect trade to be had. So I won't be rushing in on ETH. ETH has burned me many times, so I won't be rushing in on ETH.
So really just looking for a better entry.
But I will be buying any dips on ETH all the way down to 3K.
What's the reasoning there?
It's definitely going to go to 5K by the end of the year. The underpositioning on ETH by the market is still massive. Like I don't like ETH. I've been vocal about it many times, but there is a limit to how much you can basically underpositioning on ETH when you have morons like Cardano and XLM basically running, and I have very talented traders basically say that, hey, I don't think ETH makes a all-time high or a new or even retest an all-time high this cycle. Please, cut the crap. It definitely will. It's just going to surprise everyone. Just a short squeeze that will happen on it alone is more than good enough, because there's a lot of people, a lot of funds who have basically played ETH like what is that fund basically was shorting GME, GameStop for a long time, right? So they've used ETH like that. Short ETH, long Solana, short ETH, long literally anything in the world type of index setups. So there's a lot of short interest in there, and a lot of that is going to get vacated. The gamma is going to be massive when it squeezes out, and that basically gives it the escape velocity. Purely a technical trade than any attachment for the ecosystem or the token, in my opinion.
Well, Tudon says 0.35 ETH is criminal. That was a comment here. You guys agree 0.035 is criminal? Is that just undervalued? People just, it's like picking up money off the sidewalk right now?
The past few days, we can already see that Lido, Chainlink, even Uni make like 8%, 10%, 15% pumps. And we can see that Solana ecosystem has been, taking a break. So this is typical rotation, and it happens. And then we saw a correction across the board, right? So it's like there was this thesis that old alts will not pump up, but market is once again showing that market doesn't give a crap. because it is purely where trade opportunities are, where short squeezes are possible, where you have imbalances, where you have inefficiencies. Money will always rotate in that direction. And when money goes and creates a green candle, everyone will start flocking to that green candle to trade. Even I scalped XLM after it pumped 5x for another 2x. I did scalp. I am a moron myself because I was greedy for playing the volatility, right? I made some money, took a little bit of it, but I did make money. That is how money flows into the market, right?
Yeah.
So dead alls, alive alls, ambulance alls, doesn't matter. So money will flow. It decides to flow, it will flow. So that
right,
is basically what will happen with ETH.
All right, there's the passionate plea for you to get a little degen on ETH and buy the dips. Okay, well you have the price range that Amit put out there. I think I heard 3,000 up to 3,150 is really taking a lot of risk off the table, so you can get in there and really get a nice trade. Benjamin, are you doing anything different to that? You said you're buying the dips. Are you waiting for a range similar to Amit or something else you're looking at?
Yeah, 3K is a very fair range to hit it. But I think a lot of people will also, if they are smart enough, they will definitely try to buy 3K. If they really recognize the power of ETH, like it is really capable of doing such crazy squeezes. It has done in the past, it will always do it now. I remember in 2020 when it was basically sitting at 900 and BTC was around like 55K or something like 45, 50K. I remember having this conversation with Ben right at that spot. Grayscale is doing so much. We were writing the Grayscale article. On HackerNoon, we were discussing about, Grayscale is doing so much. It's buying up all BTC. Is ETH going to be dead? And we also had the DeFi narrative happen either way, right? And nothing is translating to ETH. ETH is basically dead. It was at 600 or 700. And then it started running. In like a couple of weeks, basically it had caught up everything. BTC reached the top. Then ETH went for its, 3,800 or 4,000 run. So there is no big reasoning that it shouldn't this time. Yeah. And the proof lies with XRP and XLM. That these coins come back and tell you, look, we are running. Well, Litecoin is running, for God's sake. Okay.
Yeah, well, that's okay. Well, hold on. You're getting ahead of me. I want to get into that. So there you have kind of an ETH range. Max, you're asking about that. That's what these guys are looking for. Let's get into Solana, and then I want to talk about a Dino coin or two, and then surprise you guys with one. See what you guys can do with that. Let's get into Solana because we've been looking at that. That's been a good trade over the last several weeks at this point. Amit, coming back to you, are you seeing a trade in Solana? It's looking much weaker. When I looked at the numbers this morning, Ethereum over a 24-hour period had about a 4% pullback. Solana was double that at 8%. Looks like you got and Benjamin just mentioned the rotation trade that's really maybe moving out of Solana ecosystem for a while to see gains in other ecosystems. So what are you seeing? Is there a trade, or should we kind of be hands off this week?
I mean, Solana, it's been very weak. It's been really since when it went to 260, right? There was an expectation. At least I had that expectation. When it goes into price discovery, it will go up to at least 300. But it just so lackluster from that point onwards. It's basically just fell off the cliff. Again, it's the same setup. See, there is a lot of correction that is coming in, and it is very much expected correction that should come in when we had a run. Again, looking at the ranges, 222 to 212 is a fair shot. So there are FVGs, fair value gaps on a daily basis that happened when we started to run up at that point, right? So this was one of the gaps I was trying to get in. So it got filled up, and then this is where we are sitting at the moment. So it's Monday low is basically where we are sitting. If I have to ladder, I would ladder from here all the way back to 212 and see what happens. Because for me, just going by the fibs, again, the fib is based on your MSB, market structure break, that happened on a higher time frames. And if this is your market structure break candle from right at the top of the range, right to the top of right from the start of the range to the top of the range, if you go to 260, you should get a correction from 222, and 222 is a Nelson number as well. So it is one of those numbers. If it gets hit and if it gets filled, it'll run hot. So at the moment, there is again Monday ranges are playing in. So we have covered this many times in the past, right? Monday it runs up, Tuesday it goes down, and Wednesday if the Monday range is not broken, it runs up again all the way back to Monday high. So I would say give it another 4 to 8 hours, and if it's still above 230, take a trade and ladder it down to 212, whatever fills.
And Ahmed, we got a question here from D Learner. Can you just expand on that fair value gap comment that you made just a second ago? It's a good question.
So fair value gap is basically where there no trade happened and there was only a up candle or just a down candle. So after 6th of November, right, there were loads of fair value gaps that got created because market was just up only for the time being. So basically, if you look at it, right, so every time you see this is a small fair value gap, this is not a gap itself, but yeah, so you have up candle, then it resets, then it runs up again. So you won't see these kind of gaps where in the price range where no trade happened. So this part happened in this range. If you look at it, where is my, this was the part. So no trade happened here. It just up only and then ran up. Now see that gap is covered. That's filled.
So it's a similar concept to this sort of CME gap where we're just not seeing trade in some area. We're expecting to see some volume, some activity.
Yep.
Okay. Fair
so
enough.
it does fill those gaps and then run up. So I mean, at the moment, again, looking at it from the range perspective, a Monday low is in. It's retesting the Monday low on a lower time frame if you look at it, right? So this is exactly where it is sitting. So that's your Monday low setup. So it's trying to get into Monday low range.
Yeah.
So if it gets into Monday low, then you have a good shot, and then it can run all the way up.
But sorry, what was the top you were looking at? You said all the way up.
Monday high.
Monday high.
Monday high, and then see what happens. Basically, I mean, the way I would trade on a smaller account, basically ladder down from here to 212, and from 212, see, I take 50% off at Monday mid, and then let it run. And then you can break, you have taken the profit, and then you can move your entry into break even and let it run and see what happens at 260. If it is still showing these wiki actions at 260, that means there's a lot of sell pressure coming in, and then you can sell off.
Okay.
Yeah,
there you have it. There's a
here's what I would do as well.
Yeah, I want to hear you step in here.
Let's say you love Solana, and I'm not saying I love Solana. I like that there is a degen element over there quite much compared to the other ecosystems. So if it were me, in fact, while we were discussing, I was thinking, deploy 100K Bybit, and go on full-fledged leverage, like 25, 30x leverage, and basically add orders at 3 spots, at 220, 200, and 182. And I turn off that account for until March. So, then it becomes basically Schrodinger's box. So either I get a liquidation email or, it's filled and we have run up to 800 or something like that. So that is a type of a bet, to be honest, you can take with 2 to 3% of your portfolio, put it in there for a degenerate asymmetric upside, especially if you're someone who believes that the meme ecosystem will do well. And the biggest problem right now we have on the meme ecosystem, because we're building tooling over there, right? We're trying to offer a lot of tooling for our users who are basically, trying to get exposure but are struggling, because we also undergo that same problems when we try to go into the meme ecosystem. The biggest problem is 49,000 tokens are launching per day. It's a cycle of launching tokens rather than trading tokens. Okay, so your bet rather has to be on the revenue that these shovel platforms basically are generating, and your bet has to be rather on Solana rather than don't try to diversify too much into memes. Have some memes, or let JAI on the on-chain side handle the meme sector. We are bringing Solana anytime this week, so don't worry about it. But then if you want to have an asymmetric bet on the meme ecosystem, take these 3 entries, go on max leverage, allocate what you would have allocated for the meme side, and just let it run and forget about it. because you're not going to go below 180 anytime soon. That
Yeah.
much you need to have clarity.
Yeah.
Like the risk has moved to the upside, right? So instead of trying to time things too much, buy, like, let's say you want to buy 100K worth of meme coins, buy 100K worth of Solana right here, and ladder down for the equivalent in Bybit, go for like 25x or 30x. If everything fills and price even goes to 170, you will still not get liquidated because you have organically laddered over there.
Yeah.
But if it fills and it goes for a 3x, right? Like that would be majestic. But if it even goes for a 2x, you would have made bank. So you would have definitely made more money than you would cumulatively by playing like 50 memes, because the risk is also higher in that sector. So this is how you can increase your asymmetric bet on a layer where there is a lot of degenerate activities happening, but take the exposure in the mothership rather than trying to take exposure on all the sailing boats and hoping that it will become, it will outlive Titanic.
I love that trade. Amit, you sound like you had something you wanted to point out here or add to it.
It's the ranges, the price levels are spot on. What I would say is make sure between those price levels you don't get liquidated. So when you're putting that price at 220, 200 and 180, right? Make sure your balance can cover this range. So if you're going in 50x between 200 and between 220 and 200, you'll be liquidated. So make sure
so you have to organize the laddering accordingly.
Yeah.
That is where your smartness comes and use all your kindergarten math to do that. Like
put it in Excel.
If you're able to trade Bybit or Hyperliquid, you already know how to set up the leverage. But that should be your game. Like this is a beautiful correction, and this is the type of positioning what you can try on. Like that's what I'm doing on Ethereum right now. I'm trying to positioning on a 100K account in massive sizing. It's like if it fills, I have like $2 million positioning, and if it runs, it's asymmetric money.
Yeah,
and it will. I'm pretty sure it will.
I like the thinking there on the asymmetry and kind of doing a trade, because we obviously talk on this show a lot about weekly trades, which can be a great way of keeping that count and growing it. And then this is more of the perspective that just we're in a bull cycle. There can be really large amounts of volatility. I think friend of the show has been on here. At least he was in our roundtable over the summer. If you're looking at the volatility indexes, which obviously is more options, but it does give you a general sense of all the volatility that's going to be spiking over these periods of time. And trades like this could, to Benjamin's point, really play out. Okay, so there you have sort of two different ways you can be playing trade this week. And then I like this sort of longer term bull trade for Solana. Okay, guys, I'm gonna throw out a wild card before we get to Ben. I want to throw you guys one and see how you guys do with it. I'm looking at some of what's coming in from the jumper screener, and we've got a couple of neutrals. We've got some strong bullish. All right, I'm going to throw in there. I saw this one before to see how you guys react to it. Oh, this is looking terrible. So the memes. So let's look at some dinos. Let's look at XRP. I want to look at XRP because it had a run. XLM had a run. Cardano had a run. XRP had a run, and it's now looking neutral. Jay's saying this doesn't look super hot, but I think a lot of people are asking, is this a good time to get out of those bags? In fact, Amit, you had some bags. Did you sell those bags?
Not really. I'm still in loss.
You're still in them. Oh my gosh, you almost got divorced over these bags, and you still have not let go of them. That's how degenerate this system is, this ecosystem is. Okay, walk us through what you're seeing from XRP. Is there another trade left in the dinos right now or not?
XRP, I won't trade XRP at all. Never, ever. XRP, just because the team itself, right? The people who are behind XRP, they are not, I don't trust that team. So I won't trade XRP. But
wait, hold on. You won't trade it, but you'll hold on to it, even though you finally just came back flat.
When you're in 80% loss from your entry, what you're going to do?
Wow.
You can sell your trade at least 10% loss, 20% loss, right? But if it is an 80% loss from your entry, I mean, you say, yeah, I made a
What's the
mistake.
point? What's the
And this
point?
is one
Yeah,
of the mistakes.
absolutely.
This is one of the mistakes that I'm carrying on.
All right.
It's a
Yeah.
reminder on what not to do.
What not to
And
do.
Yes.
because when we were building the Solana engine and we were running a lot of tests on the sniping systems that we had built, that was the like we accidentally sniped something at rock bottom and it went up like 20x. And then we both were discussing like, okay, so do we exit or is it going to get a Binance listing? And then we discussed about XRP, and immediately we went and said, "Okay, exit it. Just exit this freaking shit. We're not holding that.
Right.
It's fine
Yeah.
if it goes to $1 billion. It doesn't matter. We are traders, and we look at it as traders, and that's the way to go."
Yeah.
Yeah,
All right. Well,
XRP, as far as technicals is concerned, yeah.
I mean, this is coming back as neutral, and then I'm going to give you one that's bullish.
Sure.
We can see if that looks better. All right, yeah. So this is coming back as neutral. Anything that you're seeing here from a technical perspective for XRP that gives you signs of life?
As long as $1 holds, it probably has a very good shot at doing higher. But it's also high market cap, high FTV token. So, like, yeah, I'm not in the XRB army to say it will go to $589. I don't know really what to say. I mean, if that happens, basically we're all beggars in the street for bread because that's hyperinflation. So yeah, I mean it's a trade. If it tests $1, try your hand at buying it a little bit, and you probably get like
Yeah,
10,
what you need
20%.
to consider is, what you need to consider is XRP specifically has a very bad, notorious team behind them. The moment it pumps, they dump so hard that everybody's is the one. Basically, retail is the one holding the bag, or everybody's holding the bag, and the team is making off with the money. So that's the history I have with the XRP. That's why I never touch it. I've never
Okay.
taken it for one trade, so I
All
won't
right.
touch it.
I clearly chose the wrong one. I wanted to get something with a little bit more technical, and then instead this one comes with so much baggage. It feels like it's on an international flight. All right, I want you guys to look at Grass USDT. It came across as strong bullish. Let's see if we can get some information on that. See if there's a trade there.
Yeah, but Grass is a very new token, and so I think the token economics basically influences the price action at the moment. What I would rather suggest is looking at FTM because
let's pull up FTM then.
Yeah.
So real quick though, I guess
yeah.
When you're talking about tokens like this that have just launched that don't have any price history that are pumping, is the general view is listen, hands off until these kind of find some footing, because I think a lot of people can end up trying to chase those pumps and just get burned.
No, we do chase those pumps as well. Like we do trade a lot of pre-market and also listing market tokens because we see some asymmetric advantages and do it. But that's not something reproducible on a scalable level. So because there's a lot of first day unlocks of tokens that basically happens. And nowadays, a lot of projects are also working with exchanges and some market makers to basically even sell some of the vested tokens without the on-chain market knowing. So it's very hard to trust some of the projects if you don't know them very well. If you don't see a solid reasoning for the token economics. So that's the reason I was not so bothered with Grass. Even though I've used that project, it's nice, but I don't see too much of a reasoning to bother about it unless something else changes.
Okay.
FTM being a layer one, and from the golden boy Andre, and he's been trying to rebrand it as Sonic and all that, low fees, all that argument. So it's Ansem and a few other guys basically have been quite bullish on it, and price action has also been quite supportive of it. And if you see overall, it's been in an uptrend since September. And I think it's a good trading coin. I don't consider it something where I'll do what I did with Solana. But if it goes back to the AVWAP zones, the red zones that you see on my chart, not a bad buy to put in like 0.2, 0.3% of your portfolio on spot or leverage, whatever it is. Add up a little bit, buy the crash and run it, because it will give some percentage returns when the layer one rotation cycle happens. I think it will give some percentage returns, and it probably does some vaporware upside as well, because
Some
it is
vaporware
capable of doing
upside.
that. Yeah. So it has done that before as well.
So I guess the question is, you're looking at, and it's a little bit hard to see the screen just from a resolution standpoint. Maybe you could actually point out when you say those red zones that you're looking at. What are some of those price targets that you'd be looking at as you ladder
0.9,
down?
0.8, 0.9, 0.8, and 0.7 regions.
Okay.
Typically, if it goes back to 0.7, it's a definite buy, I would say.
Oh,
Like
0.7 is a
buy 10.
breakout of the range. Yeah, that's definitely a buy.
That's
If
a
you can,
definite buy.
yeah, if you can see my
But the
screen,
thing is, FTM is capable of doing that type of volatile moves. It is capable of, dumping down the whole movement up, go back down, and retest it, and then in a matter of hours, just run up back again.
yeah,
So it's a layer one which is you cannot call it liquid or you cannot call it illiquid either. So it's somewhere in between, and because of that, you can play a lot of volatile games over there. You can see the price action, like even in sideways period during September, October, November, you can see like 30% price changes over there comfortably. So you cannot stay in a position there unless you bought absolute bottoms, which you cannot with FTM. So just look at it as a trade setup. You can play the Monday ranges and play based on that.
Amit, you were showing some ranges. It looked like you had a chart you were bringing up with some of that information.
yep.
For FTM as well.
Yeah, FTM chart I'm sharing if you can see.
Mm-hmm.
So it basically broke out of the range, and that has been running on a higher time frame, on 12-hour time frame. If you look at it, it broke out of that range, and if you just put the fib on that range, it's basically retested at the top of that, and now currently it's getting rejected from previous week high. So I think it's going to go back all the way down to 90, 88. So between 91 and 88 is a good buy, and if that breaks, you just cut the trade because it's coming to 70.
Okay, well, there's our bonus trade for the day. We got something you could be looking at for Bitcoin, Ethereum, Solana, and Solana is kind of an interesting one because you got the weekly, and then you've got the sort of real way to maximize growth out of this cycle. And I think with that, we're going to wrap up the trade segment of what we're doing today. Benjamin, Amit, thanks for coming by. This is exciting times. I imagine it's going to be exciting for hopefully much, much longer as we start to get into December. We start to move towards Q1 of 2025, where everyone's hoping this market will go. Guys, anything as we wrap up? I guess, yes, I actually have a question for both of you. What's your confidence that Q1 2025 is going to be bullish, neutral, or bearish? Amit, I'll start with you. Any thoughts there on that?
Q1 2025, it won't be bullish.
It will be neutral or bearish?
At best, it will be neutral. At worst, it will be bearish.
All right. Okay. And then are you expecting better things for the rest of the 2025 or is...
Yes.
Okay.
After Q1, because there's a lot of uncertainty that comes with the new presidency coming in and the kind of discussions that are going on. So that's not my forte, but still keeping an eye on. And I think that's where most of indecision will come in. But that will solidify at the end of Q1. And then will be a clear road, basically which direction we are going. And then you will see the real bull market running.
All right. Benjamin, putting sort of the macro factors aside, are you expecting Q1 to be bullish, neutral, or bearish?
I do think Q1 is where we get the last end of the froth and top out. At least locally, the main local top probably comes in Q1. I'm not able to time it that well.
Yeah.
It's also going to depend on how this week's correction goes through. Do we just finish the correction in the next few days, or do we extend it to the first week of December? There's a lot of open questions, right? Because we have a very new participation model and money rotation model. So I saw a few very good traders who trade a lot of altcoins from like 8-9 years ago. even they are unsure how to move around in the landscape right now, because as far as the BTC is concerned, it is primarily Sailor, and that information is basically shielded. And only way you're able to get partially some information at all is using Coinbase Premium, right? So if Coinbase Premium is basically at a premium, then you bet on BTC, and you have far better chances of upside. If it is going into a discount, then deleverage. On a very dumb level, that is a way to go. But it's a little hard to time things at the moment.
Well, that gives, I think, everyone listening a little bit of perspective on these two guys. You're monitoring the market. Really, there's a lot of uncertainty going into Q1 of 2025. So I definitely suggest you stick around, like, subscribe, join us here weekly so we can share with you some of the insights these guys have on the markets, either technical or otherwise. With that, we're going to wrap it up. Benjamin, Amit, thanks for dropping by. Look forward to bringing you back next week. And we're going to transition to bringing Ben Lilly on to talk a little bit more about the state of these networks, give a different view on how well these are performing. But gentlemen, thank you. Ben, are you with us?
Marconi.
Wow. You looks like you're in the studio, and you look ready to perform with this new avatar. You look set.
Well, thank you. Can you hear me all right?
I can hear you okay. Yeah. You look good though. It's glad to have you back. It's been a while.
It has. It's been a couple months, I feel like.
Yeah, it's been some time. All right, Ben, this is exciting because we talk a lot offline about the state of the network. We talk about what it is that you're looking at to really get a deeper sense of how well these networks are performing. You said, hey, why don't I come on and share some of this information, what I'm seeing? And fantastic idea. So why don't you just take it away? What are you looking at exactly? What's caught your eye? And really, what does it mean for those who are trying to get a better sense of how these networks are performing, and perhaps even what that might mean from a price perspective?
Absolutely. Yeah, this is probably going to be a bit different of a show, especially from all the knowledge that was dropped from Benjamin and Amit there, and trying to navigate the markets and all the price action from week to week and look for those entries. This is, again, a bit different perspective. It's supposed to be more of this fundamental type of approach to looking at layer ones. And in doing so, we can start to kind of unpack or really discover some narratives maybe that you're starting to see emerge elsewhere in the market, and perhaps maybe find these new narratives that do exist on these L1s way ahead of essentially your timeline. So the background here is really, you alluded to it earlier, Marconi, which was just, this was a lot of work has gone into this, and we've created a lot of models. We've done a lot of kind of experimentation to better understand, what really makes these things tick. And I've kind of written about it as well. So instead of trying to really plan ahead, I should say, and really get this perfect type of structure and format for a show, we're just going to really just kind of get it out there, let it take form, let it take shape, and then kind of see how this evolves over time. That's sort of the goal here. So for this first go at it, bear with us here as we kind of get our feet settled in. So the work itself has been really trying to better understand and apply monetary economics and fundamentals to these tokens. And the whole idea there is to better understand what direction a lot of these tokens will go. Are their ecosystems really healthy? Are tokens that sit on these layer ones going to start, gaining momentum? And should you start to look into those kind of higher risk assets on those layer ones? And in doing so, you're kind of looking at these things as like emerging markets. And so, what are the certain things that you would look for in an emerging market? You want really good kind of law and order, consensus on that law, the ability to go ahead and apply that law. You want to go ahead and see greater users or, employment, so to speak. You want to see a lot of manufacturing start to spring up, a lot of good investment. And so we're going to be looking at these layer ones kind of in that similar lens, similar context. And then as well as like the monetary side of things, which, from a central bank perspective, how are they going to go ahead and kind of move these levers around? Are they going to start to implement these different policies that change kind of the liquidity profile of these tokens? And so that's that's what we're getting at. And I know that probably sounds like a lot, but for today, we're just going to really look at two things, which is just going to be the demand side and the supply side, right? We're just going to break it down as simple as that. And as far as the supply side, what we're trying to look for is how is the supply, sort of this liquidity profile, changing for these tokens over time. And the way that best to explain it is to go back to December 2020. And for anybody that recalls, Ethereum at that time was transitioning, kind of its first little phase of its transition from proof of work to proof of stake. And they went ahead and allowed individuals to stake ETH to its beacon chain. And once you went ahead, and it was just Hotel California. It was a one-way ticket. As soon as you got in and you were in on beacon chain, you were essentially locked up in there until they finally went ahead with the Shanghai upgrade that came around eventually after a couple of years, and then you could unlock that ETH. And so what that did was that allowed ETH to become very illiquid overnight. Demand started to spring up to go ahead and accumulate ETH, to go ahead and do so. And for anybody that was around during that time, ETH went on an absolute tear in the weeks that followed that event. So it's important to realize that, these supply kind of dynamics that take place are pretty important. Most people don't realize how much Pendle was absorbing for Ethereum earlier this year. And then when a lot of those incentives started to go away and kind of Pendle unlocked a lot of ETH, really kind of when that points narrative started to come to an end, that really was a hard environment for the weeks and months later on for ETH. And for anybody that checking out their timeline, that was essentially the death of ETH at the time. So getting to kind of this overview, we could probably just start on Bitcoin, since that's really top of mind for everybody at the moment. And when we go ahead and we look at Bitcoin, we can kind of realize that Bitcoin's going through this interesting phase. It's bringing a lot of different use cases on L2s because Bitcoin has this great narrative of pristine collateral. There's a lot of untapped value. So how do you go ahead and unlock that? How do you maybe borrow against it? How do you go ahead and you trade maybe higher risk assets associated with the Bitcoin ecosystem? And this is where the runes and the ordinals narrative start to come about, and the ability to go ahead. Can you create an environment for somebody that has Bitcoin to make these trades using that as the base asset? And as we start to look at this environment, we can start to see some of the movement of Bitcoin over time, especially as it pertains to this year. One of the earliest that went ahead and they kind of jumped onto this narrative of Bitcoin being able to use that collateral and in exchange provide points and possibly tokens was Merlin. And I frankly don't know a whole lot about Merlin itself, but they were one of the earlier ones that attracted a lot of capital to its network. And you can see late in 2023, the amount of Bitcoin staked to that network grew astronomically from overnight to looks like over 25,000 Bitcoin. Ever since April time period was essentially when the points meta started to kind of come to an end. You can see that Bitcoin was starting to flee. And it's been really just draining ever since. And so the question then is, you had a lot of Bitcoin that moved from this liquid environment to this illiquid sort of environment, thanks to Merlin. Where did it go? Did anything else start to absorb it? And as we look at Bitcoin supply, one of the kind of more recent narratives is a lot of this restaking. I believe Babylon is kind of one of the main entities behind absorbing a lot of Bitcoin. Symbiotic is another one. I think that's Paradigm's project that they started rolling out that allows essentially any asset that you really want to go ahead and kind of embrace these liquid restaking token type of attributes. But Babylon, you could see, as well as Symbiotic, because Merlin came down at April, which kind of left this period for somebody to go ahead and kind of take the podium here for all that capital that's a little bit mercenary in nature. And you can see it was absorbing it. And we're right back over at 40,000. And so that is pretty sticky. That's pretty, I shouldn't say sticky because we don't know how sticky that's going to be until we see that over time. But you can see it is absorbing quite a bit. So that's important. And it looks like there's a lot of different players involved. As far as symbiotic, I believe you have Mellow. Yeah, there it is. You have Mellow that's starting to take up a lot of that AUM. As far as the Babylon networks, you got Acorn, you got Solve, you got Bedrock, and you have a few others. And you can kind of see that broken down over here, that it is kind of distributed fairly evenly. And that is what you want to see. You don't want to see it concentrated into one, because once that meta starts to maybe come to an end, that supply is going to hit the market and become liquid once again. As far as the other thing I like to look at when it comes to Bitcoin supply is just something that is more behavioral in nature. And so that's where the HODL waves come in. And so those that don't know, a UTXO is how you can measure how long Bitcoin has not moved from a wallet. When you go ahead and you maybe pay something for $1, you get change in return. So maybe you get a couple pennies, and you can track those pennies on the chain to see the last time they moved. And that's what we're measuring here, is you're starting to see these sort of pennies the last time they were spent. And so when a Bitcoin cycle starts to really unfold, the behavior attached to somebody's tokens in their wallet, are they going to continue to HODL, or are they going to go ahead and be likely to sell? And that's sort of how we can break it down. And if they've been holding that token for the last, say 3 years, chances are the next day comes around, they're likely not going to be selling. But if we went ahead and we looked at, let's say, tokens that haven't moved in 24 hours or 1 week, the likelihood that that token could be moving the next day is far greater. And that's how we can approach these HODL waves in understanding, when that likelihood starts to increase. And as you can see, when price does start to rise, the likelihood that those tokens are to move start to increase. And then you see that sort of total supply start to plummet. And right now, and this is kind of why I bring it up, is, is this particular demographic very likely to start selling? And as far as that likelihood, it increases significantly when we get close to that top, because you can kind of see, I have highlighted here between 1 year and 5 year type of movements of the token. So tokens that haven't moved in 1 to 5 years. Go ahead.
Sorry, let me just break in here. So right now, I think we're looking at a dashboard here. I just want to make sure we're looking at the right chart, because you mentioned HODL waves. Is that what we have here? Here we go.
That is not. Thank you for jumping in. Yeah. So, all right. So these are the HODL waves. And that's the total amount of supply of Bitcoin that is within each demographic. Highlighted here in yellow is the 1 year to 2 year category. This light green here is 2 year to 3 year. And then this darker green color is 3 year to 5 year. And these, you can see as this top line starts to decrease, kind of speed up the rate of change, it really accelerates as we get into these peaks. You can kind of see that through every cycle. And even over here, last cycle around, you can see that it really was increasing right around that peak. And we haven't quite hit that acceleration period. You do have the supply dwindling over time. That's healthy, right? You want new participants to go ahead and soak up, kind of stagnant old supply. That's an attribute of a healthy network. And so if it is decreasing, that is a good sign. And it's going to be decreasing as price starts to move. That's just natural, right? I know we see a lot on our timeline that, oh my God, all this unrealized kind of P&L, or the amount of tokens that haven't changed hands in a certain amount of period, that number is starting to rise. But if we zoom out a little bit and we see like how significant, or how really kind of the quantity, is that a large amount changing hands of late? You could see it's not really massive. You want to see this accelerate, and you will eventually see that happen once price moves. So if we kind of take a step back here, I kind of hit on two ways that we can look at Bitcoin supply. On the one hand, it's really supply that's moved in and out of a wallet. When was the last time that happened? And we can see that right now, that supply, it is not really in that environment where it's very likely to change hands. That tells us, as far as price moving, we're kind of in a good stage for that price to go ahead and start accelerating, and that supply not moving hands tomorrow. All right. And then the second way we can look at it is outside of kind of the behavioral aspect of supply, where is it? How is it being used on chain? Is it being moved to L2s? Is it being moved to the Lightning Network? Is it being moved to these new liquid restaking projects? Because what that ends up doing is that creates this portion of the supply that is less likely to, again, be sold into the market, right? You kind of want to see that. It's like a sinkhole. And as those sinkholes start to generate more of that supply, that's where these supply shocks start to happen. As in, once demand shows up to the market, there's essentially less supply available on those spot markets, right? And so that's when price starts to really find new highs, new levels. And we see that the liquid restaking narrative as far as Babylon and Symbiotic, that's really start to ingest a lot of this Bitcoin. So we want to see that start to continue. We don't want to see that come down. When we explore this next week, I'm probably going to take a look into some of these other protocols to see what's going on the supply. Maybe we'll find some new narratives there. Maybe we'll figure out that, Melo's incentives are starting to come to an end in the next couple of weeks. Let's take note of what might happen there. And I will show you later on when it comes to Ethereum, kind of what happened in this points narrative, and then look at the price chart to show that, this might be significant for Bitcoin. We should keep our eyes open to it. So that, Marconi, jump in if you want to ask some questions, help me clarify, because I know this is probably a lot of kind of technical jargon coming at you, but this is just the supply side as it relates to Bitcoin, and we'll be trying to figure out a way that we can more kind of methodically keep track of it through the show.
Yeah, no, there's a lot there to unpack. I think when a lot of people think of supply, it's more about what's being issued through the mining process, right? What actually is being issued into the market. They maybe think a little bit about where it's sitting in wallets, and clearly we have these HODL waves that we're able to look at to see, are people moving through these various bands. So I think that's a good setup for the way in which we should be thinking about supply. The L2 side of it is very interesting. I know I've been talking a lot. We've had a couple of builders on here, both from Arch as well as from Saturn, that are building products to be more on chain on Bitcoin. And then I think about that, what you just talked about supply, and what we were just talking about, sort of this ETF kind of narrative, right? This idea that a lot of the Bitcoin is going to become more in one wallet, and then more paper Bitcoin sold more and more into the market. Do you have a perspective on the impact of those two functions operating at the same time, where the ETFs are ingesting a lot of this Bitcoin, which means it's really just going to be going into a wallet, not really touching DeFi, while at the same time we have Bitcoin DeFi or layer 2 and layer 1. I mean, I think some of them are really trying to do it directly on Bitcoin, is really starting to mature. It sounds like it's almost a twin turbo on both sides that are going to be, locking in supply on the ETF side. And then here we're looking at locking in supply on chain into these new instruments, if they are successful.
The way I would kind of look at a Bitcoin ETF is not necessarily as illiquid supply. I think a good analogy is actually just like liquid staking tokens provided by Lido early on in Ethereum's life cycle. I forgot when they came about, but when you go ahead and you lock up ETH into the Beacon chain, that really is illiquid. You can't hit that with the market. You can't sell it. You have to actually unlock it because you have no share. You have no essentially receipt that you can bring to the marketplace to say, hey, here's this collateral. It's locked up over here, but I want to sell it, and here it is. This ownership, this right to those tokens, here it is. I'll sell it for you at this amount. You can't do that, right? That supply is just literally illiquid. But then once, staked ETH came about, this liquid staking token, you could now go ahead and stake your ETH and now sell that representation into the market. And for that reason, it's really not that illiquid. And it's almost in the same way as when you go ahead and you lock up ETH, let's say in a liquidity pool on Uniswap, people can trade in and out of that. If anything, it's highly liquid, right? Because anybody can go ahead and exchange, say USDC for ETH at any time and go ahead and kind of have that price discovery take place. So when we look at these ETFs as it relates to Bitcoin, is this really locked supply? And to that, I say no, because once those ETFs go ahead and accumulate that supply, there is a secondary market that they can go ahead and exchange shares. There is price discovery that is taking place, right? And as more of those coins get locked up into those instruments, essentially you have greater liquidity, you have greater price discovery that can happen in those other markets, even though they're happening off chain. But what's even more important to realize is kind of when that reflexivity wheel spits back the other direction, and those ETFs can go ahead and sell a lot of those coins back into the marketplace. That supply obviously is going to be negative pressure as far as price is concerned, but it's still price discovery, right? It's not. I think the way just that we can back up and think of this is just the amount of tokens that go into these ETFs, they're still liquid. We shouldn't be viewing them as a sinkhole to help create these supply shocks.
Okay. So that's a good clarification. So really then looking more, you've got a behavioral side, which is the HODL wave, which really isn't going to be that. I mean, you can kind of use it as a guiding stick. What you're looking at more is what are these vehicles that would be on the new or emerging DeFi protocols for Bitcoin that could really actually lock some of this Bitcoin in?
Mm-hmm. Absolutely. Yeah, you want to see a lot of those sort of shocks take place. And as far as the, kind of getting back to those ETFs though, like if pension funds start to accumulate those ETFs, kind of these more instruments and these, I guess funds is maybe the appropriate term here, that go ahead and start to purchase up these ETFs, like that is sort of more of an illiquid form in the ETF realm. So there is some merit to start to track that in future episodes, I would say. And checking on those ETF flows, we know they're massive, right? So
yeah, 30 billion, I think was, well, that was a little bit ago, but yeah, it was substantial.
Right. Yeah, absolutely. And if anything, it just kind of fragments the liquidity to a degree. It fragments it in terms of now there's a lot of supply that exists in this other marketplace. As far as Bitcoin is what's happening over there, you have these L2s that are trying to attract liquidity. Within those L2s, you're going to have those marketplaces. And within those respective marketplaces, as the supply gets further and further fragmented, you could have these weird anomalies take place, which creates a nice flywheel of arbitrage where all these actors start to go ahead and they're going to generate all this arbitrage on chain, moving from an L2 to an L1 to an ETF and all sorts of different kind of angles. And this is sort of like the MEV that would happen. And I know traditionally we think of MEV as like a transaction takes place and somebody's trying to go ahead and purchase that order ahead of time to go ahead and resell it to that individual within, in and out within a block or two. And here, this is really just kind of arbitrage in a plain sense, just happening quickly on chain. And so as that speed starts to ramp up, it would get closer to MEV, but that's healthy, right? Now we would have all this kind of, if I should say, that's a big caveat here. With all this fragmentation, you have a lot of volume that starts to come in. You have these actors that are acting as these arbitrage agents. You're going to have really good flow happen across all these various ecosystems. That is good. And for miners, that's great. right? This would be a lot of transaction volume. There's going to be a lot of priority fees that come into play here to go ahead and capture that arbitrage that exists elsewhere. And so you have to move quickly. As far as how big of a premium they're willing to pay, that has to do with how big of an opportunity it is. As far as, go ahead.
No, I was just agreeing with you. Yeah, around the MEV element of it, and specifically for miners. I mean, talking to some of the builders, they are really interested in the security budget for Bitcoin, and that means keeping miners healthy, which means having transaction volume, not just necessarily the buy and hold, but actually having use cases for Bitcoin on the Bitcoin network. So, definitely something that many people are working on right now. I guess though, Ben, to take it to the next level, Ethereum has kind of led the way in terms of your thinking, because it's kind of a good petri dish to study the supply dynamics. Are there lessons that you could take, maybe analogies that you would have from looking at the Ethereum ecosystem and bring them back to Bitcoin, or is this kind of a pivot point where you could say, okay, let's actually come back to Ethereum right now. Let's actually see what some of the supply has done, what that could look like if these kinds of call it sinkholes or mechanisms are on the network for it to absorb supply.
Yeah, let's definitely get into Ethereum in just a second, but just real quick, need to hit on the demand side, I think, for Bitcoin, because on the supply side, if we could sum it up, right, there are some interesting narratives taking place outside of the ETF that is creating nice dynamics as far as the supply side is concerned. And if those can pick up steam and those can continue to have legs, right, it's going to create a really nice sort of, I guess, supply shock setup. And even though we're not quite there, in my opinion, it's still going to have some effect when it results to price as far as whenever demand shows up. So what is happening on the demand side on chain speaking? I'm not referring to, how many buyers are showing up on the ETF side, but on the most fundamental basic level, right, we can just look at how much fees are being paid, right? And as we were just talking to, as far as like all these different opportunities that exist, if people are excited over a narrative and they move over to an L2 or they're coming out of an L2, and then they really want to have sort of this prioritization take place, that will emerge on the fees side, right? There's only so many ones and zeros that can show up in a block. And so if you really want to take advantage of an opportunity, that is going to be sort of that pure signal that you can find. And right now it looks, if we were to zoom out, it doesn't look that great, right? And that's what you can see. Am I showing it? Yeah. On this chart right here, sort of the median transaction fees on a weekly basis, since really 2009, it looks like, or is that 2008?
We're not seeing your screen right now. There we go. Okay.
You are? Okay.
Yeah.
So you can see here, it's just like a little blip on the radar. It has accelerated quite a bit into 2023 over there. There has been the head SegWit upgrade that's going to change sort of what this looks like over time. But this is just a little blip right now. And you can kind of zoom in to see like how much of a kind of blip on the radar this is. And it's okay, right? In terms of, what are these Satoshis / VBs? VBs, virtual bytes, you can put 4 million of them. I think it's 4 million in a block. So how much Satoshis are you willing to pay per VB? And that's what this metric is. As that market starts to ramp up and fees start to rise, this is where you'll see it. And you kind of saw the last time we had this period, this lull take place in September. And then really early October, it starts to ramp up. You kind of see on the 8th, 7th, 8th, 9th, it starts to ramp up. If we look at a price chart, I kind of highlighted it just to show like, what there is correlation with price. Demand shows up, right? And then you kind of get the impact that takes place. Obviously, there was other factors involved here. Sailor was one of them for sure. But a lot of the demand that does show up is going to spill over just because of those opportunities we talked about earlier. So you want to see this continue, right? You want to see these fees stay at these levels and perhaps just increase a little bit, you definitely want to see these start to increase as all of these narratives around L2s and kind of these other ecosystems, like you're following, I believe, the Arch network and what's going on with Saturn. They're getting ready to, I think, roll out a DEX and that'll allow individuals to transact for, I think, ordinals, if I'm not mistaken, maybe runes as well. But you want to see the spillover into the fee market there. And that would be in my opinion, a catalyst that I don't think the market is actually looking at, because Sailor and the ETFs and Bitcoin Strategic Reserve, right? That has all the headlines right now. And as those start to wane, what's going to be left? If this can pick it up, that's a great thing to see. But more importantly, what are the opportunities over there? And so hopefully, as we start to track the supply here, we can start to zone in, week to week. What are these opportunities? Are we seeing it start to pick up? And then hopefully catch a few off guard and beforehand.
Yeah.
But hopefully that gives you a good snapshot over your Bitcoin. Ideally, we can get into Ethereum and Solana. I don't know how much time we have. So
yeah, I think today we may have to. I think our producer has an appointment he's got to get to, so we may have to to call it short. Excuse me. I think my voice is going a little bit, and you've been doing all the talking.
Do we have time to get into Ethereum? I'll cut Solana out because it'd be great to do more work over there. But
I think we have some time. I'm not hearing from the producer on my headset. As I know he did it. Like I said, he had an appointment. Let's see what we have. Yep.
All right. There it is.
Okay, let's go. All right. We got the green light.
Let's
Let's bring up Ethereum again. I think I want to go back. You have this sort of supply and demand model that you just gave from a Bitcoin perspective. As I said, Ethereum has been the really interesting petri dish because of everything that's happened over the last several years, actually, for you to be able to supply to analyze these metrics. So I'm really curious to see what kind of insights we can take there, kind of because it is just a very robust environment from that point of view.
Yeah, it's been a lot of work to just kind of unpack, where have all these tokens gone? Just kind of doing the work ourselves, just because the way in which we analyze things are a little bit different. Most data providers, DeFi Llama does a great job. They just have a different perspective, and that's fine. They take a protocol first perspective, so they go ahead and they check out a protocol and then they analyze the supply that sits over there. We kind of reverse it. We take a token first approach. And so that just kind of requires a different way to index all the data and to be able to call it. So a whole different database setup, but we can still use it to draw a lot of insights at the moment. And for Ethereum, when we look at the supply, I think really the big one that's worth talking about, I mentioned it earlier, but it would be Pendle. It says Pendle here. And I don't think most really understand how much supply got soaked up under the points narrative over there, and then how quickly it unwound. Like you can see right here in January 2024, this chart right here represents various types of ETH and that ETH getting into the platform. And you could see it quickly just accelerated to, looks like 1.5 million ETH tokens or thereabout. And look how quickly this just kind of dropped off in June. And if you kind of pull up a chart around that time period, it's on this one. So here's June. You can see, there was let me share the chart instead of just talking about it.
There you go.
And here's the price chart of ETH. And you can see, it really, had a tough time after Pendle was kind of lost the narrative on points. So it went from 3,600 all the way down to the low 2,000s. And that should not be discounted, right? That was supply. That's mercenary, right? The individual that's holding that supply, behaviorally speaking, they're using it to go ahead and make returns, high risk returns. And so the likelihood that they'd be willing to go ahead and sell at the end of such a meta, you need to take that into account. And here it is, it's kind of unfolding, right? That supply went from illiquid to liquid in a short time period, and you can track that usage, and then you can kind of see what took place in the environment. So that was Pendle. We don't see it picking up, right? That's not the greatest sign right here, right? They were able to go ahead and take in all of that capital, and you don't see much taking place on the other side here of late. I did not track what's happening with Bitcoin on the platform. Maybe we'll go ahead and do that next week, because that could have an insight. But Eigenlayer, that was another one that went ahead and absorbed a lot of capital. It's kind of been stagnant as well, so you're not having much change of what's taking place on supply. Aave, I think that was an interesting one. It was starting to increase. June, July, all the way up until looks like early October. It's been starting to take in a lot of that supply, which bodes well for kind of what Aave wants to do, as kind of turn on that fee switch, if you will, to return a lot of value. So Aave, that's probably interesting to look at, see what's going on there, if it can go ahead and earn more supply. But we would ideally see a lot more ETH getting soaked up in its ecosystem, right? This is only referring to a few 100,000 ETH. The other big sinkhole that exists on Ethereum is Athena. For those that aren't aware with Athena, it's basically like a way to go ahead and earn yield through what's known as funding rates. So they go ahead and they take ETH that comes into their platform, they put it on a centralized exchange to short it, and it just collects that funding rate. When you do a 1x short, you're essentially just capturing that USD value, and it can kind of remain stable. And that's when they print that stable coin from that. So it's kind of a structured product, even though they call it like the synthetic dollar. Whatever, do what you want to do. We're seeing good inflows happening right now as the market's starting to heat up. In November, you can see right here, it's really starting to tack up. So that's a good sign that it's starting to come in there. I know it's on the short side of things, so price speaking, it's not the best, but you got good inflows starting on Athena. You had good inflows happening with Aave. Ideally, that would continue. Eigenlayer, they've kind of lost the narrative, the meta, if you will. You don't see much inflow taking place over on that ecosystem right now. Pendle, they haven't been able to kind of regain the traction that they had earlier this year, and that continues to be a drain on the supply side for Ethereum. A lot of tokens continue to come out of there. Another one that could potentially replace what's going on with Eigenlayer and maybe absorb some of the supply coming out of Pendle would be Symbiotic. That's another restaking protocol that's trying to compete with Eigenlayer. And you can see there's not much taking place of late. So this is from October 17th to I think now, nothing's taken place. So that's unfortunate there. The other one that I went ahead and I picked up was MakerDAO. I don't know if this is taking into consideration Sky, which is sort of their rebranding efforts. And you do see a flow of tokens moving to new contracts. So this might not be a good representation right there, but you're not seeing a lot of capital get absorbed. Looks like you had about 100,000 over the last couple months, but that's about it. And over here,
Ben, let me jump in here and just ask you a question. Does any of this surprise you, given sort of the bearish price structure of Ethereum? I could almost see the argument that a lot of people would say, listen, price-wise, Ethereum, at least against dollars and some of the other tokens, hasn't done as well. Let's lock it up and earn some yield of some kind. And we've got these various structures in which we can do that. And instead, what you've seen is it's kind of plateaued, as you just shown us. Maybe you see a little bit growth on Aave, see a little bit on Athena, but you're not really seeing Pendle be able to pick up. You're not seeing some of these other mechanisms, these other products being able to attract that. Was that surprising at all when you look at the data?
It's surprising how much it matters. It's like if you go historically, when these big opportunities showed up, when ETH began to allow staking on their beacon chain, like how quickly price responded. As far as Pendle, that whole points narrative and the amount of ETH that went into that protocol, as well as all these other liquid restaking protocols, Eigenlayer as well, Kelp, Renzo, like the list goes on, Pufferfy, Karak, to name some. There was so much ETH that went into there. And early on, because a lot of these are liquid restaking, right? We kind of talked about it earlier. If you can go ahead and you have that share and you can sell in the market, like it's not really illiquid. But a lot of what took place early on was illiquid. And there was a lot of focus and attention for these protocols to have individuals lock those tokens for additional points. So that created this incentive to really have ETH at large become very illiquid across the board that was attracted to that narrative. And I would have to imagine a lot of the price movements of that time was related to that. It was really related to individuals wanting exposure to what was taking place, purchasing ETH that maybe didn't have that allocation, and then going ahead and locking it up. And now you're kind of reducing liquidity in these marketplaces as they try to have this price discovery happen. There's just not as much kind of readily available. Then on the backside of that, how much moved afterwards and how much of a kind of depression it's been on price ever since. And that's where we're at now. Can ETH as an ecosystem start to change things? And at the moment, ETFs are purchasing up, but that's a different type of demand. That's not necessarily that sort of kind of meta, that catalyst, that narrative that attracts a lot of attention. You're seeing kind of AI agents take place. And when we get into demand, we'll talk about how that's spilling over onto Ethereum. But you're not necessarily having individuals seeking ETH to go ahead and have that larger side exposure. Now, if there were to be like a glimmer of optimism that does exist, I would have to kind of point to which are AVSs, which are essentially these providers that take place on the Eigenlayer ecosystem. So if you want to go ahead and have a certain type of, if you want Oracle, sort of like this software provider, this service, and you want to subscribe to it, you can go to Eigenlayer and subscribe to this AVS service, make a payment towards it. And if those yields start to rise because there's a lot of attention, there's a lot of demand for these services, and those services, as far as the fees that get accrued over there, they get passed on to those that are taking part in that restaking process, which would impact the yield. If that rises and that kind of gets out into the wider marketplace, you'll see ETH start to flock into that ecosystem. You don't see it right now, right? There's not enough money that's being kind of churned over there for anybody to really care. So I'm still waiting to see, and this has nothing to do whether price can move in the meantime, right? Because we saw a bunch of these tokens that you guys talked about earlier, they still moved, right? And I have to imagine ETH's still going to move, right? But it might not be able to move as much as it could have, given that the supply is not as great. But with the coming L2s, with the AI agents, I do have some hope that it's going to be able to find something. But in the interim, right, supply side, trying to get a summary here, what's the takeaway? Just supply hasn't really, as far as its on-chain usage, hasn't been as great as it was before, right? That dynamic is not changing as of right now, right? We need to see that change for supply to be better on the Ethereum side. But what we do see is demand starting to show up, which is a nice piece of the puzzle because we haven't seen that in God knows how long. If I were to go ahead and zoom out, and if I I am sharing it over here. And we look at the last, or what happens when I click this? 2 years, that's a little long. I don't really want to look at 2-year fees. Sometimes love this dashboard and sometimes hate this dashboard. 1 day, 30 day. Come on, one more click. No, it goes from 30 days to 2 years. Okay, that's not quite what I'm after. But what I'm trying to show is that fees have been very depressed since March, right? They've come down significantly. And they've been 1 GWE, which is essentially the minimum that they can be, for way too long, right? And that just kind of hits that there's no demand for the chain. Nobody's trying to buy up ETH. Just go ahead and make a transaction to go ahead and send it, to an L2 or to lock it up onto Pendle, for example, or one of these other liquid restaking protocols. There's just not that much demand. And if we go ahead and we were to zoom out a little bit, we're starting to see these little spikes that show up. This is just a 30-day, and the average now is 24. This is, I know it doesn't seem like it that's high because there's like this little line right here that signifies when the burn starts to happen. But it's actually pretty good. And really the reasoning behind this is what's taking place in the L2s, right? We're starting to see some traction take place. We're starting to see some demand show up. And that demand over on the L2 side is starting to hit the L1 fees, starting to hit the block space over there. And there are by Hill Dobby that kind of really paints a nice picture. And so for those that aren't familiar with this blob market, you need to have, basically more than 3 L2s starting to attach kind of blobs in a block. Once that happens, price starts to rise, right? That's the magic number. And so this chart right here breaks down, how many blobs are happening per block. You got the blue is the 1, teal is 2, yellow is 4, orange is 5, red is 6. Right. So you really want to see 4, 5, and 6 start to ramp up. And as we kind of take away the other ones, you can see of late, it's a pretty nice uptick. It's not awesome, right? We're barely at 50%. But as that starts to rise up, that's going to impact fees. And that's what this chart is telling us over here. Right. You can see it's been flatlined, right? And that has been essentially, if Ethereum were to have a heartbeat, you would think it's dead since April, if you will, right? And this is kind of showing us, it kind of was dead. Nobody was really requesting this new market that popped up, but we're now starting to see it. And Base is a big driver of it. And I have to imagine this whole narrative that's taking place with AI agents, that's spilling over into this marketplace right here that's creating a demand for ETH that hasn't been there. Now, if that narrative can attract ETH and lock it up, now you have 2 birds in 1 stone taking place on the narrative, but we don't quite have that here yet. But what I want to say is on the demand side, we haven't seen ETH do what it's doing today since the upgrade that took place in March. So this is a positive, and I know the supply was a little bit negative, but this is good to point out.
Ben, does this at all have to do with the underallocation of the market? I mean, just earlier in the program, we were talking about the fact that so many traders are underallocated to Ethereum. They've really gone all in on Solana. Maybe they've gone into Bitcoin, but Ethereum seems like it really has not received any attention. Is it that, or is it that really the activity? And I haven't looked at Solana to see, the competitive activity from a DeFi perspective that's picking up. What do you think it is that's maybe driving this demand right now?
Well, the demand for Ethereum right now, as far as the chart that we were just showing, a lot of that is kind of the attention taking place on Base. And you can see here, this blue portion of this chart, that is Base, right? They're essentially, there's a lot of data that's coming in from the L2 network over there. And it's essentially 50, probably is 50%. It's pretty close to 50% of all the L2 marketplace. So you have to pay attention to the ecosystem over there. There's a lot of demand. I even saw just yesterday that there was some, I forget, transaction reversions taking place, which is a sort of a sign that there's a lot of demand, and there's a mechanism in place that sort of kind of curtails it a little bit so things don't get out of control.
Mm.
And so that's a good sign, right? It means demand's hitting like this inflection point to where you have to almost throttle it to some degree. And as you start to do that, you kind of introduce a constraint that wasn't there before, right? And so now you just created a bigger level of scarcity than you've ever had. And so what's going to happen on the far side of that, that's what we're going to see. But as far as the spillover taking place into block space on the L1, it's impacting the fee market. And as far as these fundamentals are concerned, that's what we care about. But as far as bases, maybe there's a narrative over there where a lot of ETH is going to be attracted. But that right there, that influence of moving ETH to get locked up, to get staked, to earn points, to earn secondary yield, there needs to be something. Mm-hmm. And I don't necessarily see it right now. I mentioned the AVSs are one potential way, but other than that, I'm having a hard time for, somebody who's holding ETH to get excited about, taking place in some protocol or new activity.
Sure. But it is the starting point, right? It's kind of grass shoots or green shoots, as they say, of maybe that the investment that's been made to try and build up the capacity, right? That was where a lot of this design work was coming from the blobs network to the design of the entire ecosystem. It's really setting up so you can have more capacity, and now we're getting there, right? And now it's really about getting the demand, the narratives, as you're saying, to really start to feed into that and bring the actual demand for the system.
Yeah, I think it was always known there was going to be some growing pains as they kind of shifted out of the L1 to the L2s. This isn't something that Solana has had to deal with. They probably won't have to deal with this until the bear market in 2026, 2027. They won't have to deal with going through that growing pain of, your L1 is starting to contract. You're not having as much fees take place over there. Your validators aren't earning as much of that execution yield. So at the same time, now you're trying to push some of the transactions a little bit off the main network. And I know they call them like extensions, and I haven't dove into that to really have any sort of decent say on if it is sort of this L2. It just matters where the fees happen. If you can somehow push the fees off the L1 in some degree, then you know what, the scalability is going to impact your fees on the L1. And that's what matters at the end of the day. I don't care what you call it. But once they go ahead and they see that kind of new fee show up, they see that new marketplace, or they kind of see transactions like have this deflationary, like it doesn't cost as much to make a transaction event, right? How are they going to go ahead and navigate that? And that is that growing pain. That is kind of going from, you found product market fit, you're a good chain, you're a great ecosystem, now become like a whole global network that you're aiming for. And if you can do that, now you can kind of 10x your scalability or whatever those numbers are. It's a big growing pain. And Ethereum is really the first one to go through it right now. And we're seeing how kind of hard and, for lack of a better term, bad it's been for its price. And I think, honestly, they could have done a better job looking back. That's always 2020 hindsight there, but they've definitely could have made some decisions that would have made, I think, that transition easier for a lot of those individuals building on Ethereum. It would have kept a lot of users of their ecosystem. And I think that's what they didn't really price in, which was like, how many users are you going to lose during this maturation moment? So, we'll see. But Base it's very interesting. I mean, I'm going to spend more time, I think, this next week looking at Base to see, are there a narrative that, is going to impact the fundamentals of Ethereum, because maybe there's a lot of ETH that's going to be staked somewhere, locked up, change liquidity profile, right? That's what we're trying to after. Like, what are the narratives? What are the protocols? What are the projects that are going to impact, these fundamentals in terms of supply and demand? And to me, that's really, if you're a researcher, you're an analyst that wants to do long-term work, and a little bit less of the day-to-day trading, that's kind of how you find these projects, these narratives, is see how the tokens are being used, right? Because that is just vanilla, right? It's just black and white. And so that's what we focus on a lot.
Well, I'm very excited and interested to see where this goes, specifically on the AI agent side. I know that's getting a lot of airtime. And, I think it was something just yesterday I saw from Salesforce.com CEO saying, we're tapping out or we're reaching the upper limit of what we can do from an AI perspective. It's not all going to be about AI agents. So I'm expecting over the next 6 months, we're going to hear a lot about that. But from my limited understanding and experience working with some of these AI interfaces and tools, it actually seems like it could be a very substantial area of growth. The tooling. And I don't mean that specifically to Ethereum or Solana or Bitcoin or any place, but but I sort of see this interface that's being built with these tools. And then the question is, what can they do? And you're seeing some of that already with some of these smaller projects. I think I tweeted about one last week that was a sort of an attempt to try and use AI swarms, was the term they were using to talk about fighting misinformation. And it's an interesting use case. Now, how that feeds into the supply and the demand, it's not at all clear to me today.
Yeah, I just realized when I looked down, my eyes are closed. But I agree, there's a lot of interesting developments that are happening. And I always like to take the approach of time is this flat circle. And if we go back to prior cycles, like what would this look like back then? And the ICO boom was taking place in 2017. There were so many tokens that were coming out. You had a ton of different, what were they called? Initial DEX offerings, IDOs. And then I think there's been a lot of other terms that have been used, and we see pumped out fund launching tokens left and right. And then you see over time, you had individuals that were purchasing ICOs and trying to create like this decentralized autonomous organization that was acting like this hedge fund and accumulating these projects. And then that eventually in the next cycle, they created vaults. But you look at these AI agents, now they're starting to form these organizations that are like these syndicates that are starting to purchase tokens and create treasuries. And it has a lot of like similarities and parallels from that time period. And it's fun to watch, right? There's no doubt about it. But where does that go to? Like what becomes next? And as far as like supply is concerned, that's where I keep kind of moving my head, is like, what was the evolution to where ETH actually matters as far as usage? Because in the ICO era, what many don't realize is ETH was this form of payment to get this spot for future token allocations. And that was the points that we saw earlier this year, right? ETH was purchased to go ahead and be used to earn your points, which was essentially a different form of the ICOs and initial DEX offerings that were happening. And so as far as AI agents are concerned, like what is that? What would that look like? I know there's a lot of discussions on like treasuries, but you don't see ETH being used over there for the main asset in that treasury. So it's going back, finding those parallels, and finding out what that could possibly look like. I think that would lead to an interesting discussion, result, finding, if you will.
Yeah, absolutely. Yeah, it's all very early, and to your point, it's not at all clear where this could go from a supply perspective, from a demand perspective, really. And again, I'll say this on the AI side, I've seen a lot of novel but not very useful tools from an AI perspective. And I think a lot of people may push back on that and say, well, no, look at all the transformative things you can see with OpenAI. But if you look at a lot of the solutions, I find them to be, I mean, it's definitely moving in one direction. I would say that's moving up and to the right in terms of capabilities, but it's not at all clear exactly what that looks like. And so like a solution like email, as an example, which is a paradigm shift that most listeners probably don't even realize because they've moved to messaging. They're not even doing emails. But when you come from the old world like I do, where you went from being able to have very delayed communication to near-term communication, and globally, instantly, it is a paradigm shift. And I think the AI moment hasn't quite occurred. When it does, it could happen quickly and it could happen substantially. And so it'll definitely be an interesting moment to watch.
Oh, absolutely. And I'm not, anybody who specializes in research when it comes to AI and chips and compute and that sort of thing. So I try not to go down that rabbit hole when talking about it or writing about it, because I think there's a lot of people much more talented on those subjects that I would rather be reading from. So I wouldn't want to really create more noise in the marketplace. But one thing that really strikes me again is, I look at things of how they're used on chain, and even going back to, and this is where I almost have a little bit of concern, which was 2020, similar to what we just mentioned with the ICOs, right, of how ETH was being used as a payment to get equity. This cycle, we saw that points was a big narrative. ETH was being used to get those points. In 2020, ETH was collateral for a lot of these DEXs that were getting launched and emitting these tokens. And we had the food token craze that was taking place. And lending and borrowing protocols were giving people tokens. And that was in 2020. Right. So each cycle you have the same thing essentially happening again. And then in 2021, one of the biggest kind of usage of ETH was really payment for NFTs. So many individuals were spending obscene amounts to go ahead and purchase monkeys and all these different JPEGs. What are we going to see this time around? And possibly it's the purchase of AI agents in some capacity, right? Because if you're a builder of these solutions and these services, how do you go ahead and extract capital out of the marketplace? And that should be, how do you make that payment in ETH? Like if I'm going to, right now at least, if I'm going to go ahead and accept USDC or ETH, like I kind of would rather have ETH at the moment. Go ahead and make that denomination, because if anybody remembers the NFT era, it was like 0.02. Like everything cost 0.02 or 0.01 ETH. Like that was the payment, regardless of how much price was moving. And so if somebody's offering a service, like why not make the payment right there, 0.02, right? It seems small, right? Nominally speaking, of course, but it doesn't matter. It's essentially ignoring what's happening on the fiat side. Because if you're accepting USDC for, say, $100 for whatever your services that you're offering, it's always $100 regardless of what's happening in the background. Right? You're not getting any, and this is a speculative marketplace, you're not getting any upside. So what I would like to see is what is the service that might be offered? It's not going to be, and actually I did see somebody create these token applications. I shout out for one of the guys I was talking to last week, but it's essentially the evolution of NFTs that's happening. So where do these AI agents start to kind of blend in with these NFTs into these kind of these new forms of tokens that can be coming to the marketplace that have these mini applications involved where you can start to chat with these things? Like, is that a payment people want? Is that a payment where they can go ahead and have that sort of assistant, if you will, to go ahead and do whatever it is that they want to do, perhaps? And that's what I'm hoping to see. That's what I'm watching for, right? And that would be that big catalyst that we would, if time's a flat circle, I think that's what it would be.
Yeah. Well, very interesting. We'll have to continue to monitor that and see what some of the projects are that come out. Always happy to have builders on here. Hopefully we can get some more. I'd like to do that. Well, Ben, this has been a masterclass in breaking down supply and demand, lots of data. I suggest all those who are out there, if you've got questions, you can obviously tweet and find Ben on X. You can also leave it here in the comments. We'll see if we can flow back. Most importantly, I suggest you come back because I think Ben, we're planning on bringing this back, so at some frequency. I mean, the question always is how frequently does the state of the network change and what can we look at? But I think we want to bring you back and discuss this further.
Yeah. Any feedback for like what was too much, what was the right amount, anything there where we can help structure, format this show where it's of value to you, please let us know. Otherwise we're just going to kind of keep on rambling into the oblivion until somebody tells us otherwise.
Nice poetry right there. All right. Well, Ben, thanks for dropping by. Anything else before we wrap up?
No. We'll talk next week.
Okay. All right. Well, thank you for everyone for joining us on this extended version of the Trading Pit, a slightly different format. Hopefully either you enjoyed the trading, enjoyed more of the fundamentals. In my mind, you should enjoy both because it can help you get a perspective on where we are headed. I'll say it, as I always say, keep some dry powder. Obviously, dry powder would be good in days like this where we're seeing some drawdowns, but definitely have that available. You're going to want it. And with that, this is Marconi White signing off.